Hello, everyone, and a very warm welcome to today's Major Markets Update for December 15, 2023. You might be wondering, why do we have this slide up here that says December 1? This is because during this presentation of 2 weeks ago, I suggested we might be in a blow-off top. Blow-off tops just go straight up, barely any pullbacks. And that's exactly what we have been experiencing over the last 8 weeks. No pullbacks whatsoever. It is just straight up week after week, day after day, and everything gets bought. Sentiment is absolutely through the roof in the sense that this is currently the lowest bearish sentiment by AAII in over 6 years, and bullishness as well. But that's a condition. It's not a trigger. Price is the trigger, and we've not broken below any price levels. Now, today I want to review the bigger picture. I know some of you want to see the hourly slide, some of you want to see the 5-minute slide, some of you want to see this wave, that wave. I cannot cover everything, so it is my prerogative to decide what I want to share, because I know you as my member base and what people are interested in. What you are necessarily interested in is not necessarily what other people are interested in. So I always have to find a happy medium. That is the unfortunate case. So I cannot always satisfy everybody's needs all the time. If I do that, this will be hours long because there's so much, of course, to cover. So please bear with me, as I sometimes don't cover exactly what you are interested in every single day. But please be then compassionate and considerate that other people now get their turn and they will have to wait when your need is met. I think that's just the way it goes, and that is what we have to simply deal with. So I'm going to go straight to the charts, to the bigger picture. And we start here off with the NASDAQ, the regular NASDAQ. I always like to go in alphabetical order, so we don't really give a ranking to which index we find more important than others. This is the wave count I've had here. I have not changed a single thing on this map, that we are in this B wave. Okay, so far so good. And the B wave can become irregular. Okay, please keep that in mind, that simply just because we think we have technically, standardly, a 50 to 76.4% retrace, it doesn't have to be the case. Okay, B waves can become irregular, make a new all-time high, as we're seeing, for example, for the Dow Jones. I have not that is most likely also a irregular B wave, in my humble opinion, because I can't count 5 waves up since the last October low. I'll show you that in a few later slides using some work by our famous colleague Pretzel. So this still looks good. This is the monthly chart. Month is not over yet, but still looks strong. And yes, we can go to 15.5 to 16,000. Okay, that is nothing new, because let's quickly go then to the daily chart. And that is exactly what we're still looking for. We simply have a much more extended third wave of the fifth wave of the B wave. And this can go on for quite some time, all right? If things want to subdivide, they subdivide. At some point, if we move too high for this green wave 5, then the third wave was incorrect, because it is then the shortest wave. And then I have to make it a 1, 2, 1, 2, 3, 4, 5, and we keep on going for a bit. But so be it. This was our initial target zone. We've reached it. We've reached the 76.4% retrace. But as you can see, we can easily go to 15,119. Okay, so that is still possible. Even to 16,000, it is still possible. 17, 18,000, that would be a irregular B wave. Once the B wave starts, I don't know if it becomes irregular. Nobody knows. If you think I know that, that'd be fantastic. I will tell you in a heartbeat. We're going to go 14,000 on the NASDAQ, and that's it. No, we'll therefore set out our target zones. Target zones are large. The bigger the picture, the larger the target zone. Okay, so that's what we simply have to content ourselves with when we are dealing with these complex systems. So shorter term, quickly, right? We've topped here in the ideal third wave target zone, and yesterday we already bottomed in the ideal wave 4 target zone. Though I still haven't really seen a down day to confirm that we are indeed in this gray wave 4. Okay, so far so good. Definitely a very strong market, and definitely very bullish market. Now, if I go here then to the NASDAQ 100, I show you the yearly candles since 1985. Red candles is a down year. They are corrective years. So we have, in my humble opinion here, wave 3, 4, and this is then cycle 1. And here we have cycle 2 in 2001. And remember, technology did not make a lower low during the 08-09 market crash. So this is, in my opinion, 1. This down year is wave 2. Rally, 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 rally. And then we had 2018 is wave 3. 2018 is also wave 4. We had a lower close. And as you can see on the intra-year basis, a 23.6% retrace. Right? As you can see, this is the normal wave 4 target zone, at 23.6 to 38.2% retrace. Well, we went to about 25, 26% retrace of this entire rally. Perfect. And then we went higher. Okay, I'm not looking at intra-year blips and stuff, because some people say, well, the 4 was here. Fine. No, rally, rally, rally. Last year was a down year. And again, exactly a 38.2% retrace of this entire rally that started in 2001. That is typical fourth wave behavior. So we should now be in a up year and close higher for the year. And that will then be wave 5. Of course, I don't know how long wave 5 is going to be from a timing perspective. Maybe it's going to be several years. 1 year could be enough. That is then 5. And then we have completed a larger wave. So note here how extremely overbought, of course, the market was. You could see it here in early 2000s. You see it here again in the late 2020s. And we're now going to see potential negative divergence develop. Okay, both on money flow and the RSI 5 on a yearly time frame. Divergence is only divergence still not, but it matches with the wave count. And that could then usher in a much bigger correction. That correction I can show you, for example, here. This is the chart of the semiconductors, also on a yearly basis. I've not changed any label on this, nothing. I've not switched anything. This has been in place for quite some time. Those that have been with me for a long, long time, and I highly appreciate it that you are still with me. And that means you understand how markets work, all those things. And those that are just new with me, I cover a lot of charts. I cannot cover every single thing There's no real need to pull up a yearly chart every single update. Okay, so this is something I would say you print out and put in your files, right? You gotta have files on the charts. That said, as you can see here, on a closing basis, we did a 38.2% retrace. So I have not even changed the label of this wave 4, so we can put it here. Okay, went a little bit deeper, but on a closing basis, we're fine. And now we're already in this wave 5. Okay, this is what I had from the target zone. We should now be in this wave 5. Okay, perfect. So wave 5 is underway. And it can go to, and I'll show you that in a minute, using the monthly chart. Then we will get a 4, and then we'll get a potentially another 5. Okay, so far so good. This chart has not been updated in a long time, but it looks good. On a closing basis, as you can see, it was a almost 38.2% retrace. Part of the inaccuracy on these large time frames. And also here we had no negative divergence, and this maximum reading suggests indeed a third of a third wave, major 3 of primary 3. And we should soon start primary 4, which will probably bring us back here to the 2020 lows. Okay. On a monthly time frame, excuse me, I have not updated this chart in a long time either. The only thing I did was for you, I had the wave 4, I believe here, is place the wave 4 label here. So this is slightly different wave count than 2018 into 2019 was primary 4. The rally into 2020 was major 1, major 2. And then the decline into 2022 was major 4. And we're now in major 5. I've not updated the wave extension or the arrows. Okay, this is all the way back to 2021. I was looking for higher, lower, up. And this was then the ideal wave 4 target zone. Well, we overshot it by a lot. Okay? That's a lot. You can say, you suck. You don't know what you're talking about. I'm sorry. I cannot get it always correct. This is definitely a lot more than I anticipated. But again, wave 1 and wave 4 did not overlap. It came very close, but as you can see, no overlap, right? No overlap. So there versus there, no overlap. And then we're still A-okay. We simply have a much deeper fourth wave than what should be usual. Usual is this. That's textbook, standard, common, all that stuff. But the market doesn't have to at all. At every single time, the market doesn't have to do anything. As long as wave 4 and wave 1 don't overlap, and as long as wave 3 is not the shortest wave, it can, for F's sake, do whatever it wants to do. Okay, that's the unfortunate nature of the markets. But I think we got a pretty good, otherwise, the general path. And we're now in this wave 5. We've already made a new all-time high. Perfect. And that should then be cycle 3, potentially super cycle 3. And then we get this decline. Okay, now how would we rhyme that? As you can see here, with either a cycle 4, super cycle 4. I don't know. I don't know. But both, of course, hint to a massive decline. Okay, both. How do we align that with the yearly chart? Well, the yearly chart would call it a primary 4. Okay? But again, it depends on how would you label this. This could be cycle 1, cycle 2. Okay, and then this is primary 3, primary 4, and then this is cycle 3 and then cycle 4. It's just how you're going to label it. Okay, labels are not to be hung up on. Okay, labels are just labels. Potato, potato. Big, massive decline. And this is, of course, just suggestive. Okay, this could easily go all the way here. Again, it all depends on how much of a retrace we get. So let's put it something like this. All right, there, and then we get a 38.2% there, and then we get that one. Okay, so call it primary 4, right? Call it cycle 4, call it super cycle 4. Couldn't care less. All of them point towards big fat declines, probably back to the 2022 lows, potentially even lower. Okay, that I don't know. I don't know, and I'm honest to say that I don't know. But please note, we're getting all this negative divergence starting to develop. Also here, this is quite interesting. This is the MACD. I already said here in blue, this is what I'm going to follow. I have not updated this whatsoever. So far, so good. All right, so far, so good. So the MACD has not confirmed the higher prices. RSI 5 has not confirmed the higher prices. Again, this looks pretty good here for a third wave of a third wave top. I like it. Okay, so far so good. So we're wrapping up a much larger top. I think that's what the yearly chart suggests. That's what the monthly chart suggests. And then, of course, we can go into the daily chart as well. Of course, I want to resubmit the form. The daily chart as well. And with now just a total melt-up, I have no good way of analyzing these targets. But again, it matches, right? 555 or 5. Okay. There. It matches. This matches. This is, in my humble opinion, a blow-off top. I have a very hard time finding it any other way. Okay. Everything has been listening really well. Wave 3, wave 4, wave 5 of 3, perfect. Wave 4 here bottomed exactly where it had to. 3600 had to hold. Boom. My ETF trading alert went long, I think here, and they potentially here. And this has been a fantastic trade already. It is already selling into strength, racing stops. This is a massive winning trade. Okay, this is just really, really nice, fun trading from a trend perspective. We don't care what the third, fourth wave is. We just follow price and the signals for a trend change. But I think we're getting close to this third wave top. I know it feels like we're guessing, but I just don't have a reliable way. This wave 2 is so deep, and this is so crazy extended. I simply don't have reliable patterns for it. I don't. So this is then wave 1, and as you can see, wave 2 was almost like 99%. That is just absolutely crazy. Then we have to add all these fib levels. Okay, so and then this is 261.8 right there, and then we go here to 361.8 right there. This is 461.8 right there, and then we go even higher, and this is 561.8% extension at the moment. 561.8% extension. That is just absolutely insane. That cannot be known beforehand, okay? This is 561.8% extension. That is absolutely insane, right? Somewhere around there. So is it going to top then at 461.8, 361.8? I have no reasonable way of knowing. What I do know is that we should be looking for a pullback. It's going to come. One pullback will happen at the very least. Okay, so we're just going to ratchet up the pullback target. So it's just really simple. And now I'm going to say it should not break below 39. I don't want to see it break below that. Okay, as I showed you, typically fourth wave stop bottom somewhere on 23.6, 38.2. That's what we apply. Okay, and then we'll see. Odds increase that it's not if we drop below it. That doesn't mean it won't be. Okay, 39. Let's make it 39.50, right? Nice and round number, 39.50. Okay, just because it drops below it doesn't mean it's not. That we've seen here. Okay, ideally it should have bottomed here. It went well below it. Okay, quite interestingly, it really did a nice symmetry box. If you look at this was how much we went above it, and this is exactly how much we went below it. See that? Not too bad. So just because it goes below it doesn't mean it's not. It just increases the odds it's not. But as long as 4 and 1 don't overlap, it can come within a point of the fourth wave. Remember, and I'll show you for the the S&P 500 in a moment. The S&P 500 came within 3 points of overlapping the first and the fourth. But it's not an overlap. It was way deeper than it should be per this textbook. And as you can see here, this is textbook. Okay. If you see here, this wave 3 in red, and then we're going to look here at where should this wave 4 then bottom. Okay. Maybe it was there or there. It's okay. So we say, well, the wave 4 should ideally bottom there in red. Okay. But we're not going to let it go below here if we have some extensions based on the internals of the A, the B, and the C. Okay. That's something else. So as you can see here, it came awfully close, a little bit of an overshoot. And then, of course, we use the internals, the A and the B wave there to assess, as you can see, where should we then look for? C is A or C is 161.8? Well, it came pretty darn close. Okay, so a little bit overshoot, but not by much. So we're going to do the same here. So wave 4, first warning is, of course, on a close. This is then a warning sign, right? We're dropping a little bit lower. It's like, that's a warning. Might not happen. We're going to check this out. And then we can still get another blast off, as you can see. Something like this. That would then target probably the 600% extension. Remember, we're looking here about 4,500. We're getting awfully close. Awfully close. 4,500 is ideal, awfully close. So that brings me to the S&P 500. Also here, a yearly chart, all the way back since 24. I wish stock charts would keep all the data because I have data all the way back to the 1920s originally. And we do the same here. Down years are corrective years. So I can count beautiful impulse higher from the 2009 low. This is a down year. Okay, 1, 2, 3, 4, 5, 6, 7, 8, 9 suggests we do need an up here. Okay, no negative divergences, but once we get there, like here, you know what we get. Once we get there, you know what we get. Negative divergence. We got here a 65% haircut in the mid 1970s. Okay, negative divergence. Negative divergence because we had equal price. This was a large flat. And that could then complete cycle 5. Okay, again, we're just looking at closing prices, and down years are corrective years. Impulses travel in 5, 9, and 13 waves. Okay, 13 waves up. I don't care what the exact wave count is, but based on the annual prices, this works perfectly. 13 waves up since the 1947 low. Okay, the only one that doesn't work here is pretty much 1934. Out of all years, I have 100 years of data. Only one is a little odd. This looks like 3 waves up. Okay. Yeah. So we have 100 data points and only one I cannot account for. Everything else I can account for. Then we here have 9 waves up. You see this? 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay. How you want to wave count it? 5 with me. This is the 1, 2, 1, 2, 3, 4, 3, 4, 5. Please note this is the log scale. So small down years are actually bigger than you think they are, but this is a log scale here as well. So down year, as well. This is by 0.01%. Down is down. This is also a down year and a down year. I don't care about the wave counts. I don't care about the internals. I can account for 99% of the waves. This is as good as it ever gets. So it does suggest we need a higher high. So we could go to 5,034. I'll show you that in a minute. Okay. IWM. IWM can try for 256 to 74. And then also here we have a fourth wave low, though I prefer it to be in this larger B wave. Okay. As you can see, IWM is really struggling with this red trend line. If we break above it consistently, we can go to 208, 212, potentially 221. Okay. But that, of course, is then still a B wave. It is possible for this to be a fourth wave, although similar to the semiconductors, it's awfully deep. And I don't know how to resolve this mess ever since the 2022 low, other than this being a large flat. More about that in a moment from our dear friend Pretzel. So we're going to look quickly at market breadth, and then I'll jump into some other issues. And still positive, though not as great anymore as it used to be. But negative divergence can last a long time, 36. And I also wanted to point this one. We've been looking at the RSI 5 of the summation index to tell us that a top is in place. It has been extremely overcooked, right? The ebbs and flows of the market. For those that have been with me for a while, you know that if we get very overcooked, eventually we'll have to, get undercooked, so to say. Right? After flooding comes the ebb, and after ebb comes the flood, the usual tides of the market. We've not seen it at all. We've been looking at this for quite some time, and it is relentless. It is so relentless that I have to go back quite some time to find when was the last time that this indicator was this overcooked. 95.27. Okay, so this is the 2009 low, and technically I don't think there has been a time that it has been this overcooked. I have to check this number out here, but this is the only one, I believe, the only one. So I have only one comparison of 15 years of data. So this doesn't tell me anything. I can go maybe back a little bit further, but there's only limited amount of data available. 20 years. Do I have anything else here in 20 years? As you can see, I've been keeping track every day, but this one is off the chart, because this is how high we are. Still, only one, just to show you how extreme we are, which matches, in my humble opinion, with a growth top. 25 years back, okay? Do we have any data here? Yes, we do. The only data we have here, okay, this is this one, there. Excellent. So that makes N is 2. That's it, right there. Suggests a massive bull market. Okay, possible. Will be relentless, going up relentlessly. And how much more data do I have? 30 years. Okay, so this is how you can do historical data. And that's it. So N is 2. That's all I have. N is 2. Not much to go by. It's really not much. Just to show you how extremely overcooked things are. And based on the wave counts that I just shared, it does suggest we are in a final fifth wave. Not in a first wave. Final fifth wave. That is my humble opinion, and I stick with it. So extremely overcooked. We'll have to give it time to see how high this one can go. Okay. Now, in case you say, well, this guy has no idea what he's talking about. That's what I've been told quite frequently. Remember, this is what I posted publicly October 9. All right. 2 months ago, rally to 4,800 in the cards. Okay. This is October 9. Look, we had it on the chart already. 47.80. Can we get there? Okay. Can we get there? That was the thought. Or are we going to go much lower? But we knew if we would break above a certain price level, we would go higher. Okay. Again, we anticipate, we monitor, adjust. So back then we said the S&P 500 must move above at least 43.24 to strongly suggest the red wave 4 low is in place and the rally to 4,800 has started. Okay, but if we keep on dropping, then we won't see it. Well, we broke above 43.24 and the rest is history. So this was already in the charts. Now, I followed up, and this is work that I share with you as well, but this is a little easier for me to show you. A month later, that I thought we would get a simple standard impulse. That's the anticipation. We anticipate a simple standard impulse. Just like we had here, a simple standard 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Okay, that's what we anticipate. We monitor for it and we adjust if necessary. And what did we get? What did we get? Let me quickly show the chart. Not that one. Not that one. Complete blow off top, right? Just complete. It just go straight up, straight higher. 1, 2, 3, 4, 5, 6, 7, 8 weeks. 1, 2, 3, 4, 5, 6, 7 weeks up already. Okay, 7 weeks up already. So this didn't transpire. This is why I was looking also for 45, 47, which was the usual fifth wave extension target. Okay, we blew past it. We'd already reached it right around the Federal Reserve announcement on Wednesday. And that's why I was anticipating a pullback at the minimum. We didn't get it. So this is not, so it doesn't mean, I don't know what I'm talking about. No, this is what you anticipate, a normal standard impulse. And what do we get? We just get blast off, complete blast off. I cannot forecast that, but we did get to 4,800 because we're just there. It's another 80 points. Okay. And intraday, we're only about 60 points away. Now, so this, we already knew we would most likely go to 4,800. Okay. It sets the index up for around 4,800 when the pullback comes. We didn't get the pullback, nothing. Okay. Not a single ounce of a pullback essentially along the way, except for maybe a couple of days. So again, this is what Pretzel posted today as well, where he, for example, forgot about the possibility of a running flat. Okay, and it happens. Nobody's perfect. This is the NYA, which is essentially similar to the Dow Jones. We have the October into December rally, and this is then the flat. And it was a running flat, and I've shared that with you before. And running flats are quite uncommon, as he mentions as well, very rare. Okay, so you forgot about it, but now it's there. You're back on it. It happens. Again, we all make mistakes, right? Just don't try to make it again. That's the only thing we can do. And even him, he's been in the markets for more than 2 decades. There are always more lessons from the market. Okay, just to show you, nobody's infallible. We all make mistakes. And if you just overlook one pattern, what it takes then to get back to being on track. Okay, not to show you he's bad, but just to show you that if you're not very careful with analyzing the patterns, you might get wrong-footed. And it's sometimes really hard to analyze a sideways down pattern that has been going on for over a year and a half correctly. Okay, but also here, he's looking here for this C3 higher. Okay, so far so good. I don't have the Dow Jones on here either, but it is what it is. Then I want to share you also work here from our dear friends at wavetrader.net. Again, not to show you that they're wrong and all that stuff, but Gilbert is a very good Elliott wave analyst. Okay, absolutely. If you think differently, I really don't think you know what you're talking about. And even him, or he was looking for a pullback before we go to 4,800. Well, we didn't get it. Okay, so he literally posted that most likely we'll see a pullback, etc., etc. It didn't happen. So you can say, Elliott wave doesn't work, all those things. But as I showed you here, right, you anticipate the initial path. And if it doesn't happen, we're now in a blow-off top. This is an absolute blow-off top. I don't see it any other way. So please then remember that we go only by, as Gilbert nicely points out, a reasonable structure, right? We go by the reasonable structure. What to expect based on this standard stuff. We didn't get it. And here we are, almost at 4,800. So we're going directly to 4,800. Okay. As he says, it does not mean we will be going to 4,800 without a pullback. And that's exactly what's happening. It's okay. We all make mistakes. That's, that's what I wanted to point out. We all make mistakes. We all sometimes get it wrong. Pretzel got it wrong. He's been in it for 20 years. Arthur got it wrong. It's probably the largest Elliott wave forecasting service available for folks. So they also don't get it right. So don't expect me to get it right. Don't expect anybody to get it right. Trade it accordingly. As long as we are above support levels, it is higher. Okay? That's the only name of the game. And we are well above support levels. So this is then the weekly chart. Again, I'm not trying to throw dirt at them. I wanted to point out that even those that have been at it for 20 years plus can get it wrong still. It's not easy. If you think making money in the markets is easy, you're wrong. It's been easy for the last couple of days and weeks, but it's not going to last. It's not going to last. The market does not go up forever, especially not in this fashion. So this is then the wave count for the B wave we've been tracking. And that B wave we had originally planned for around 4,300, 4,500 back in, I would believe, October last year. Okay, so we've far exceeded it. And then we have to, of course, be cognizant of the fact that we might see 5,000 plus. Anyway, it depends a little bit on how do we wave count this pattern. Is this A, B, C of black B, or is this all of black B right here? And then we have 1, 2, 3, 4, 5. Okay, 4 and 1 here overlap, so I don't really like it. So it's maybe just better to apply the different wave count and saying, okay, we have B here, and we're now in this, and we target anywhere between 47, 46, and 4,800. So make that 4750, 4,800 is the next ideal target zone for this wave 5. This is the last stand the bears have. Okay, the last stand. If we go above it, then I'll adapt this wave count. If we get a weekly close above here, you can see 4801. It really depends on where exactly you put your Fibonacci extensions, but 4801 versus 4799.94, you get the idea. That's why we say 4800. It also shows why this is a magnet. All right, we haven't reached it just yet. It is a magnet for the market. Now, if we then get a weekly close above 4801, we will target 5,034. Now, please note the 200% extension of wave 1 measured from wave 2 here in 2020 targets 5,034. The 200% extension of wave 1 measured from wave 2 targets 5,034. Both are exact, so this might be a strong magnet for the markets. That will then be 5 and 5 of 5. That will then complete our bigger picture, wave 9, since the 2009 low. All right. So you see how everything aligns on the small to big time frame, from the daily to the weekly to the monthly to the yearly charts. And that's why I cannot show all this stuff all the time. It's way too much to do this every day, and it's not necessary. So next upside target, 47.46 to 47.99, make it 47.50, 4,800. Okay. And again, please remember why we were looking for this 47.50 target. Well, that boils down to here, 138.2. It's a little hard to see maybe, but you can go to the articles. It's all there for folks to read. We simply went to 4,800 a lot faster than I thought we would. A lot faster. Oh my God, how fast. It is crazy. Well, the calls have been paying, so that's great. I actually threw in 2 puts today and made about 50 bucks on those. Wow, I dared to throw in some puts today, believe it or not. So that's what we have. So 4750, 4800 is our next upside target. We weekly close above it, and I will be looking for 5,034. Okay. Again, this relentless move higher is very hard to wave count, I must admit. All right, for the short term, folks, this is the 34345 setup. Okay, we got a little bit higher at 300%, so it is possible we have already topped for 5 or 5 or 5 at the 300% extension. Okay, it is possible, but I have zero indication that we have a top in place. Zero. Okay, absolute zero. Now this is the 3, 4, and 5 that how we can target that 47.55, 4,800. Remember, right? 4,800, 47.55 falls really nicely in it. It's, in my humble opinion, we're in a 4th wave. It looks like to be a flat, and then a wave 5. Again, 47.55 to 4,800 matches really nice with the weekly chart. Okay, and alternatively, 3, 4, 3, 4, 5 gets us pretty much the same target. So again, please remember that the more we zoom in, The more variable the wave count becomes, the more uncertainty there is in the wave count. The more scribbles you analyze, the higher the chance you're wrong in interpreting a scribble correctly. So that's why I do not do the 5-minute charts anymore. At the most, the hourly chart. And as you can see, please remember, the Elliott wave principle is designed around intermediate to long-term trends. How beautiful it captures the Elliott waves on the yearly time frames. Right? So I got 99 data points correct. There's just one data point I cannot explain in 1934. That is fantastic. It's absolutely fantastic. What else people say about the Elliott wave doesn't work? I always say, don't confuse your own limited mental capacity with that of an amazing tool. But the more you zoom in, the more likely you are going to be wrong because there's more and more to interpret. So even if you're 90% of the time correct, if you need to interpret 100 more waves, you'll get it more wrong more often. That is always the problem. So that's why I don't want to cover everything all the time. Again, 1, 2, 3, 4, 5 would have been really nice. Just as I showed you here, would have been picture perfect. Well, that's not what the market gave us. Okay. So it wrong-footed Pretzel. That's okay. It wrong-footed Avi Gilbert. That's okay. It wrong-footed me. That's okay. It happens. Okay. That just shows you how difficult the market is. Meanwhile, it is easy now because up is up. You know, this is where the latecomers to the party come. Oh, stonks, they're easy. Trading is easy. Just buy and buy. But the market won't go up like this forever. And we use objective analysis. So we have our target zones in place. They are much more powerful than any other opinion. Remember, price is the aggregate of everybody's opinion at that certain moment in time. So you don't need to know everybody's opinion. You don't need to know the news because the news is being assimilated by all the market participants and then translated into price. So if the market knows everything about the news, all you need to do is follow price. Very, very simple. All right. So again, I think we're having a better grip now on where we're going. We were already looking for 4,800 2 months ago. Well, we got there in a heartbeat. That went really fast, which really to me suggests this is a blow off top. Be it either that of a B wave or we're going to go to 5,034. I cannot tell you the difference yet. But I think 4,750, 4,800 is our next target to reach, even after a brief pullback. Okay. And then we'll see again if we can get to 5,034. If so, that'd be fantastic. And from a trading perspective, yeah, what you need to do is simply move your stops higher. From a long-term investment perspective, move your stops higher. I don't see anything above 5,034. Some people say 6,000 or 8,000. I don't have anything for you along those lines. I don't. Then this is then supposedly a first wave. This is a first wave, a second wave, a first wave, a second wave. Is it possible? Absolutely possible. I just don't see it. So I cannot tell you that. The same, of course, here is that with the longer time frame, yes, 9 waves can turn into 13 waves, just as 5 waves can turn into 9 waves. But is it going to happen? Time will tell. I don't think so. It doesn't match really with the semiconductors. Doesn't really match here with the NASDAQ 100. And we'll just have to see how long this is going to continue. But remember that yearly charts barely ever get it wrong. They're the ones that really we should keep in our back pocket and look at, and then laugh at everybody else who think it doesn't work. Because if it works 99% of the time, it can explain 99% of price data. That's an amazing tool. An amazing tool, and it looks like this wave 9 is underway. Can we get 10, 11, 12, 13? For sure. Of course we can. I cannot tell you if that's going to happen or not. We'll have to take it day by day. So this is a very long story, but I think the weekly charts here show it quite nicely. We were aiming for 4,800 already a long time ago with a pit stop at 4,750. Okay. Potentially all of wave B at 4,750 as well. Well, the market decided to make mince meat out of that one. So then we look higher. Very simple. But remember, even on Wednesday, we did not even break below that critical level, I believe, was let me see here, where can I find it? We never broke below 45.45. Okay, that was the critical level to break below. We never did it. Then we raised the level to 46.06. We never broke below it either. And instead, we got a extended fifth wave thrown at us. All right, so be it. That's fine. I wish I knew that beforehand. That'd be great. But again, if I show you then the semiconductors on how extended it is, right? 561.8. So of course impossible. But this reeks of a blow-off top, in my humble opinion. And I'm going to treat it accordingly. So please always make sure you sell into strength. You raise your stops, whatever your preferred method is. I still don't think the upside is entirely done. I'm still missing a fourth and a fifth wave, like here, the green 4, green 5, to set up a little bit more negative divergence. Again, it shows you, right, when we were tracking divergence, that we always say it is a condition and not a trigger. And all the divergences got erased because divergence is only divergence. It's not. Please keep it in mind. And for example, seasonality, I'm not showing it here, also got completely blown out of the water. All those things. Mercury retrograde, blown out of the water. Seasonality over the last 126 years, blown out of the water. So none of it aligns. And everybody's a hero in a bull market, but it won't stay this easy. Okay, please keep that in mind. So this is, for example, still the May into July setup that looks to be the case. Take care, trade safe. I hope you appreciated this webcast. Again, I didn't want to paint any bad picture about Pretzel and Ivy Gilbert. Just wanted to show that even the greatest get it wrong sometimes, and that's okay. And that the market can throw a wrench or a curveball at any given moment if you're not careful. But for now, I remain bullish. I still think we can go to 4750, 4800, potentially 5034. We did not get the subdividing waves that I was looking for. That would have been so nice. Right? That didn't happen. Not at all. It has been straight up. What a party. But parties never last forever. And make sure you won't be a latecomer to the party, but that you leave at the height of the party. All right? Take care. Trade safe. Catch you all next week.